Hi, everyone. I am Veronica from Resource One Credit Union.
Hi, my name's Elizabeth, and I am also from Resource One Credit Union. We want to ask, have you started saving for retirement? Lucky for us, Veronica happens to be an IRA specialist, and she's going to walk us through IRAs because there's a lot of options and they're pretty confusing. So today, we are going to give you the scoop on IRAs with Resource One.
Yes, please note that I am not a tax advisor. I'm an IRA educator. So if you have specific questions that may be specific to your tax situation, we recommend that you please see a certified tax advisor. So like she said, there are many different options when it comes to IRAs out there. But first, I want to talk about what an IRA actually is. It's an individual retirement account, and it's a form of a retirement plan that's provided by most financial institutions. And it provides tax advantages specifically for your retirement savings. So we have at Resource One, the most common type that we offer are going to be the Roth and the traditional IRA. So for an IRA, either one, you do have to have earned income. So as long as you're working, earning some kind of income, you are eligible to contribute to either of these IRA types. Now, please note there are limits and there are specific earned income types that qualify. So make sure that you visit the irs.gov or again, talk to that tax advisor for your specific situation. But for either one of those IRAs, you can have no matter what your age. You can be 100 years old and you can still contribute to an IRA.
How about people in their 20s?
Absolutely, as long as you have earned income. So if you're earning income, you can contribute to an IRA. There are limits too. So there is a specific amount and it changes every year and that's determined by the IRS, but you can contribute up to $6,000 per year aggregate into your traditional and or Roth IRA. You can't have both. Let's talk about some of the differences between the traditional and the Roth IRA. So for the traditional IRA, this is definitely the most common. Think about your 401k or your qualified retirement plan through your employer. Whenever you contribute money to a traditional IRA, those funds haven't been taxed yet, but that's awesome because that money gets to grow off of every penny that's in there. However, whenever you make a withdrawal, you are going to have to eventually pay those taxes. So that's the big thing with the traditional IRA. But no matter what income level you have for the traditional, you can, as long as you're making money, as long as you're earning income, then you can contribute to it. And sometimes your contributions are tax deductible. Now, again, eventually you will have to pay taxes on those funds, but it's still a great deal because you're earning money while it's still in that IRA. You're still earning funds on those funds. So then, of course, we have the Roth IRA. And this is way newer than the traditional. It was offered about 1994, but it's a little bit different. So for the traditional, you pay your taxes after you withdraw. But for the Roth, before that money enters the IRA, that's when you pay taxes. So when it's time for you to take it out of that Roth, no more taxes. You've already paid those taxes. It does have some income restrictions. So again, make sure you do a little bit of research to make sure that you make the appropriate income to contribute. But as long as you're working, you can contribute no matter what age. Your contributions are never going to be tax deductible, but real cool thing with the Roth, it may be tax-free completely as long as you meet some of the requirements for withdrawal from that Roth IRA.
So that's when it comes in for your tax advisor. Please consult them before you make any of these decisions.
Absolutely. Absolutely. And another thing about the Roth IRA, and it really excites me, so I have to say it, but even your early withdrawals, so early withdrawals of earnings. So again, you'll never be taxed on that money because you've already paid taxes before it entered that Roth IRA. But of course, while it's in there, it's earning interest. So once you meet a certain point, you may not even have to pay taxes on the interest that you've earned. So if there's any penalty involved, the penalty for withdrawing early, and this applies for the traditional, there's a 10% penalty tax that the IRS is going to charge you. But if you meet the requirements to withdraw, you won't pay interest, you won't pay penalty on anything when it comes to that Roth IRA.
Oh, that's great information.
Absolutely. So another type of IRA that we have at Resource One that we offer is called a SEP IRA. And that stands for Simplified, tongue twister, Simplified Employer Pension Plan. So let's say that you're self-employed or you work for someone who is self-employed. They would be able to contribute to a SEP IRA for you, and you would be able to contribute to a SEP IRA as long as it meets the limits. Again, check with your tax advisor or the IRS.gov. But as long as you meet those limits, no matter who you're working for or if you're self-employed, you can still start a plan so that you can retire with funds, with money in the bank.
That's great. I hear sometimes that people that are self-employed, oh, I'm just saving in my savings account for retirement. And really, this really helps in the long run, especially for the people that are self-employed.
Absolutely. The tax advantages, you just can't beat those when it comes to that, because you're going to pay money on that savings account. You're going to pay interest. You're going to pay everything on that savings. But if you need to use it for retirement, which we all are going to retire one day, we want to have something in the bank so that we can live how we want to live when we're not working anymore.
And typically you earn more interest in an IRA than you would just a regular old savings account.
Yes, absolutely. So at Resource One, and all financial institutions differ with the different products that they can offer. But at Resource One, you can put your traditional, your Roth, your SEP, you can put those in an IRA savings account or an IRA certificate. And with those, the rates are different depending on how long you keep those in there. But those products are made for anyone's retirement position or situation, you know? So the younger you are, you may want to save for a longer amount of time. And the older you are, you may not want to save as long. Either way, whatever your preference is, we have products that would be able to assist you with whatever your goals are for saving for retirement.
Really, that's what I'm hearing is just, it really depends on each person's situation, but no matter what, there's options that could fit your situation.
Absolutely. And I do want to sneak in and talk about the Coverdale. It's
a bonus account.
Bonus account. It's called an educational savings account. So technically it's not an IRA, but it's styled like an IRA. But it's a savings plan that you can make for your child. So it's to benefit a kid who's under the age of 18, and it's for them for their college expenses. So as far as the limit this year for 2021, the limit is $2,000. So every year you can put $2,000 aside in an educational savings account, IRA type of account, but it's reported to the IRS. But you can put money there set aside before you pay taxes on it so that you can pay for expenses for your child when it comes to college and, you know, all of those expenses when it comes to getting their education. But it helps them to pay for those qualified expenses, and the earnings are tax-free. So as long as you're using them better. Yeah, it's better, tax-free. How can you not want to do something like that? Different strokes for different folks, but it's a great product for our children.
Yeah, especially since, I mean, they are starting out and everything. So if they're doing their own taxes at that point, when they're over the age of 18, like, don't set them up for failure where they're going to have to pay taxes on this extra money. This is a great product for them. And exactly. Even $2,000 a year, that's paying for books, especially right now. Books are so expensive, just that. Yes. So every little bit's going to help.
Absolutely. So just as we close out the conversation about it, but make sure to do your research on all of your options. It's not something to take lightly. Like I said, whenever we retire, there's a certain lifestyle that we want to live, and having an IRA or any type of retirement savings plan will help you do that. And so you have to start somewhere, and an IRA is a great start, or maybe you have something somewhere else. Don't be afraid to rate shop. Look at your local credit union, look at Resource One Credit Union. We'd be happy to assist you with that. And reach out to a financial advisor if you're looking for something for your finances, because maybe an IRA may not be the best for you, or maybe investing in stock might not be the best for you. But a financial advisor can look at your specific situation and give you the best advice possible.
Well, to close it out, we've learned a lot about IRAs. There's so much to go over. I'm pretty sure there's more you could talk about.
I could talk about it all day, honestly.
Well, we are going to stop right here, and we've gotten kind of the overview of everything. And I think you've given us a lot to think about, and we're able to tell the differences now. So for any of the information we discussed today, information can be found in the description below, along with other ways for you to contact us if you have any questions. And that's the scoop for IRAs.